Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I am drinking some lemon lime Gatorade. Ever since they made me take those water pills, I felt like I needed to be hydrated more. It's like your body's struggling between having sodium and I think that I'm looking at these pills they gave me. It was like potassium something or other. But I think that was the cause of the headache. I had the worst headache I've ever had after I was on these things, and it kind of got my body out of whack. But for the most part, I am a lot better than I was. Okay, got this from XRP James T, who is the official former Navy SEAL of the Digital Asset Investor channel. And he had sent me this CNBC, a forensic study on Bitcoin's 2017 boom, has found that nearly the entire rise of the digital currency at the time is attributable to one large player, although the market manipulator remains unidentified. Now, when I see something like this, I think, okay, well, yeah, I'm sure there were some big manipulators in the market at the time, but I don't know if it was one. I mean, and if you read this article, what they're basically talking about, they're attributing this. Let me see if I can see what I think it was Bitfinex and the whole Tether thing. Yeah, he were able to follow the clusters of data to a source. One large account at Bitfinex, the digital currency exchange. Bitfinex, one of the largest in the world. Study found that through Bitfinex, the single player was able to manipulate demand for Bitcoin via extreme flows of tethers. See, now, I mean, I find that very likely that there are some people that are doing that with Tether over there at Bitfinex. I think that's highly probable. But ultimately, in the last 3 or 4 bull runs, we didn't even have Tether. So there can be manipulation of all sorts, and there will be. There's manipulation on Wall Street. I mean, it's just, it seems like every other week we have manipulation. There's an article about how JP Morgan was manipulating the silver market or this market or that market. So yeah, manipulation's a natural part of markets. Now, while this digital asset market is smaller, it's easier for it to be done. But I wanted to show you this, okay? Because when the markets are down like this and everybody's getting all upset and frustrated, you start to see all kinds of people weighing in on why the market's not going up and what's going to make it go up and all this. Well, what's important to me when you have that discussion is to go back in history and look at what has already happened. And the reason that's important in markets, especially because markets do follow cycles and patterns. And to me, you can't, like for instance, with regard to XRP or any digital asset, what the most important thing is, Brad Garlinghouse has said 1,000 times, is if a digital asset does not have utility, then it should go to zero. And he's right. Now, to ignore how the market forces will react to the discovery of that utility or to the press coverage of the fact that that utility is here or is coming, to ignore the market aspect of that would be crazy. It would be insane, because the market, at some point, in my opinion, at some point, the market is going to realize, hey, this XRP thing is actually going to be used, and it's going to be used on a large scale. I don't think the market truly realizes that yet. But I want to show you what's happened. And this title of this article is Bitcoin, but it's only Bitcoin because that's always been the leading digital asset. This is the market. When you read articles like this about prior bull runs, it's really just about the market, the crypto market in general. 4 Bitcoin bull markets, big lessons to learn. Wall Street's so-called experts, now this is from September of 2018. Wall Street's so-called experts are creatures of habit. They behave in patterns that are as predictable as the tides. When a market soars into bubble land, they pour out of the woodwork to cheer the powerful fundamental forces that are driving prices higher. When the bubble inevitably bursts, they scramble to predict its demise. And precisely when a brand new bull market is in the making, they pronounce its last rites. Rarely is this pattern as clear as in cryptocurrencies, a much maligned asset to begin with. Okay, well, they go through the different bull runs, and there's a few different things that I want you to get out of this. Bull cycle 1, September 2010 to June 2011. Bitcoin begins the cycle with a powerful but non-parabolic rise from 6 cents to 80 cents. By April 2011 until this point, the rise is driven mostly by Bitcoin users and long-term investors who understand the technology and share the vision of its founder. Then suddenly average investors begin to pile in. But the market is still minuscule, extremely illiquid, and unable to accommodate crowds. So price goes ballistic. Bitcoin literally blasts off to the stratosphere, surging from 80 cents to a high of $36. Now that was the first bull run. Bull cycle number 2, October 2011 to April 2013. And this is the one, let me see. No, that's not the one. This is the second one. Like the prior bull cycle, Bitcoin enjoys a very solid run from $2 to about the level of $10, up fivefold. Long-term buy and hold investors, nicknamed the hodlers, who bought early in the prior cycle, are delighted. But anyone who joined the prior cycle during the fanatic run-up to $35 is still frustrated. Does this ring a bell to any of you out there? I mean, history is repeating itself right now, folks. The frenzy returns in early January. The king of cryptos breaks out above $13, starts to accelerate to upside once again, exploding to a nosebleed bubble high of $260 in April 2013. And then we've got bull cycle number 3, April 2013 to December 2013. Now, folks, this is the one I've told you about that on Thanksgiving, and you can actually look at this chart. This is Thanksgiving 2013. This is the one that I was there for, okay? Because I've told you the story. I was in my backyard smoking a turkey. It was still dark outside. I'll never forget it. And I've never seen anything like it. But this is the bull run, the first one that I took part in. As before, the recovery from April low of $50 is initially slow, reaching the $100 level by October 1st, 2013. And as before, it's the last 2 months that deliver the giant price explosion to $1,160 by December, a surge of 1,160%. Irrational exuberance infects not only average investors, but also the media, which sings the praises of the crypto until, that is, the next bust strikes, ushering in Bitcoin's longest bull market to date. From its $1,160 high made on December 2013, Bitcoin plunges to a low of $150 by January 2015, an 87% decline. The bear market is so long. Does this remind any of you listening to me of anything? The bear market is so long and so deep. Bitcoin evangelist Andreas Antonopoulos says he's worried about the future of crypto. But as before, even at the bottom, investors who bought at the beginning of the cycle still have tripled their original investment. And then bull cycle number 4. So they were saying the same stuff right here, folks. They were saying the same thing. They were saying the exact same thing. And this is the one many of you may remember. I told you when this one was when this thing was over, I thought that I had been wrong. Okay, and it was at least a couple of years, it seems like, until XRP finally just took off again. And that was, see, everybody talks about December of 2017, but it actually started as I recall, the first, after this bull run, there was a spike in, I believe it was May 2016 that caught my attention again. Bull cycle number 4, January 2015 to December 2017. It takes Bitcoin a couple of years to recover from its great bear market of 2014. Couple of years. Does that sound familiar to any of you listening to me? Then the big action begins in 2017 as Bitcoin launches a solid move from roughly $1,000 in January to $5,000 in October. As in 3 previous cycles, however, it's not until the last 2 months of the bull run that the public jumps in with both feet. Public's prices rise like a rocket. Bitcoin surges to its high of nearly $20,000 by December, and of course the crash inevitably. So, and then now here we are, right back in another, 2 years. We're in almost 2 years. Sound familiar, anyone? It's all familiar because history, and here's where they say, if history is any guide, the first few months of the next bull cycle could be slow and choppy. Don't expect prices to explode suddenly, but this will be the ideal time to invest. The core of the bull market will be solid, but not parabolic, a good time to add steadily to your holdings. It's not until the final blow-off phase that you will see Bitcoin make new all-time highs and rise parabolically. Time to take most of your money off the table in phases. The next crash is bound to wipe out at least half of the gains, So we went through all of that. Now, the 3 major changes in the Bitcoin bull cycles. Change number 1. This is as we go forward. Change number 1. Bitcoin is no longer alone. They're talking about how we have these other digital assets. Change number 2. Trading volume and liquidity have improved. Let me have some Gatorade. Trading volume and liquidity have been improved. And here it says, in the climax of the first bull cycle, Bitcoin shot up 4,500%. Climax of the second shot up 1,300%. Climax of the third, 1,100, whatever. Okay. Change number 3, adoption and infrastructure have steadily grown. Now listen to this and listen good. I've been talking about this for 2 years now, and they summarize it well. Before 2010, all trading was over the counter. In 2013, only one exchange existed. And in 2014, the biggest exchange, Mt. Gox, failed. But the consequence was the birth of dozens of new, more secure exchanges. And today there are 206. Now this article was written in 2018. Today there are 206 operating exchanges, according to CoinMarketCap. Stepping back from the trees, it's clear the best days of cryptocurrencies are yet to come. From a fundamental standpoint, engagement in cryptocurrencies has never been greater. The infrastructure and underlying technology are in the best state that they've ever been. In the long term, there's only one way to go from here, onward and upward. Exactly. Okay, let me see if I can get through all this. From Peter Voss, sent me this, and this further illustrates what you're dealing with. How this is from a newspaper article, apparently, how even the leading new economy stocks ruined investors. This is what was focused on from 2000 when the stocks came down. Well, we know what happened with Amazon, and they were advertising Amazon was down 98% and all that. So it's a good illustration of things. Michael at BAL5 links, 58% of banks said they were levying negative rates on some corporate deposits, and 23% said they were doing the same for retail depositors. And there's a list of some of these German banks. I mean, it's really surreal when you look at all these banks that are literally telling you to pay them to put your money with them. I mean, it's insane. X-Men XRP at XRP33 sent me this. President Trump's alma mater introduces Bitcoin and crypto classes. His alma mater is Wharton, the business school, University of Pennsylvania. The collegiate is offering its first student-organized course in cryptocurrency technology. The 7-week series entitled Managing Disruptive Change, Cryptocurrencies, explores the technology's recent history and related businesses that use Bitcoin and other cryptos to transfer money and value, redesign payment rails and business transactions, and reimagine monetary systems. There you go. Wonder why they would do a course like that if all this was just over. XRP crypto wolf, XRP ledger transactions skyrocketed to an all-time high of 3.53 million on Friday. XRP's previous all-time high was 1.7 million. The transactions were well ahead of Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, with Ethereum coming in behind XRP at 794,000. Well, my prediction is that all of this transaction levels, that at some point, whether it's because the investors start to realize this or whatever, at some point, the market is going to recognize what's going on with this, and I think it will directly affect prices. The official Uber driver of the Digital Asset Investor channel sent me this. It was a Michael Arrington tweet. Governments viewing crypto as a threat will be left behind. And this is just some article on that. Yes, you are correct. Now, I want to show you all something fascinating. I don't think I've ever brought this up on this channel. Costa Rica Kelly out of nowhere sent me this. And I don't know what this is. I know what Bretton Woods is, but it says official release Bretton Woods 2, 74 years after the historic agreement that made the U.S. dollar world reserve currency. A new Bretton Woods meeting is about to change everything. It could not only displace the dollar, but also spawn the biggest profit opportunity since the end of World War II. Well, what is Bretton Woods? We've talked about it on this channel before. Bretton Woods' system of monetary measurement established the rules for commercial financial relations among the United States, Canada, Western European countries, Australia, and Japan after the 1944 Bretton Woods Agreement. This is what also established the IMF and established the U.S. dollar as the world reserve currency. Now, when I talk about XRP and the world reserve currency, I'm not one of the people that thinks that it's going to be like the world reserve currency, but I do believe that it will be somewhere in the mix, probably as a bridge currency. The same answer that the central banker from India gave Brad Combs at Swell. I believe that it'll be either in a basket of digital assets or just as a bridge currency or both. But it's not going to be like, I don't believe it's going to be like the world reserve currency. I've never really thought that. But here's what I want to show you that's interesting. I wish I had, you'll remember let me see if I can pull that. I don't see let me see if Bretton Woods, this is what I want to show you. I want to show you this. You see that building? That is where Bretton Woods took place. Okay. So when Swell happened this year, I never said anything about this to my audience, but I did behind the scenes bring this to the attention of like Mr. B and Brad Combs and these guys, because I had just done a video not too long before about Bretton Woods. And so when I saw where Swell was going to take place, it literally, the hotel where Swell took place, literally when I saw it, there was one thing that popped in my mind the second I saw the building, and that was this building, because I had seen it like a week or two before and I had done a video. Well, I've never gone over this with you before, but I'm going to show it to you. The first thing you should know, Donald Trump and Kim Jong-il had their summit at this hotel. And it's called the Capella Sentosa Island in Singapore. Well, they had there's actually, when you walk in the front door, there's like a seal on the ground, some kind of plaque or whatever that you can look at that is like a symbol of their, whatever their agreement was. I don't even remember what the agreement was. But let's look back. This is Bretton Woods, and this is where Ripple had Swell. And I'll never forget it, because I told Brad Combs and Mr. B, I said, do you see the right side of this building? You got the red roof. The right side of this building has these columns. And look, if you zoom in on this building, Look at the columns over here, the red roof. I mean, it literally, and trust me, I know, okay, maybe there's nothing to that. But at the same time, it's like, whoa. I don't see a building that looks anywhere similar to this very often. When I saw this, I was like, whoa. But right in here, I mean, this is where we would get picked up from things. But right in here, that seal I was talking about was. I just thought that was interesting. Now, let me give a couple of titles. Aaron Gilbert, he said that he wants to be the official manager of the Digital Asset Investor channel because managing is what he does. And so you now have this title, the official manager of the Digital Asset Investor channel. And also, something we didn't have is a violinist. This MDG asked if he could be the official violinist of the Digital Asset Investor channel, and he now has that title. And as I tell everyone with these titles, with great titles comes great responsibility, folks. Remember that. I'm the Digital Asset Investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe and hit the like button. And tell your friends and family that Bretton Woods sure did look like that building where they had swell. Thank you for listening.